working? Yes. Good to see you guys here.
Hello.
Welcome. So at the start, we always start with a round of intro. We can keep it very short, like a few minutes each. So why don't we start with you, mate?
Hi guys, I'm Aldwin, in charge of Vietnam, Thailand, Malaysia market for Bitgo. Just a brief introduction of Bitgo. We are a wallets and custody platform. We are the biggest independent custodian in the world today. We have 120 billion US dollars of crypto assets with us, of which 50 billion is staked, thanks to one of our good staking partner right here. And I'll hand it over to you.
Hi everyone. Hi everyone, my name is Yanshan. I'm the head of APAC at Figment. Right, so thanks Aldwin for helping me to do a little bit of the introduction already. So as he said, we are a staking service provider. Right, we focus on security, we focus on delivering performance for our clients, and we are also the largest independent staking infrastructure provider in the world with more than $15 billion of assets under stake. Right, we look forward, to more collaboration in Vietnam as we see, increasing development and, positive changes coming up in the Web3 industry. Right, so I'll pass the time over to Taka from Ledger.
Hi, good afternoon. My name is Takatoshi. You could call me Taka for short. I head the APAC region for Ledger. Ledger is well-known in this space now. It's been running for about 10 and a half years. Since inception. The retail wallet, you probably already know, we have the products called Ledger Nano, was the first in the market. We have about 70% of the market cap for those Ledger wallets. We also have a consumer app called Ledger Live. This is where you can do your trading, your staking, etc. Obviously teamed with Figment as well. And then we also have an enterprise solution that we support a lot of custodians, exchanges. It's the backbone technology for a lot of these crypto service providers. First and foremost, Ledger is a cybersecurity company. This is what we are really known for. We've never been hacked. And this is kind of the area that we like to support Vietnam going forward. Thank you.
Hello, my name is William. Nice to meet you guys, and hope everyone is doing good. I'm representing NT Capital, and we are a hedge fund from New York Wall Street. So basically, I'm here for our venture capital department, but essentially we are a buy-side player, and we hold 50% of the position on Wall Street CME, and then we also have 50% position roughly on crypto. So for us, it's an investment that we do like quarterly. And we make sure that we deploy capital on the tier one or good potential project that we think is worth, no matter you use different metrics that we measure. I think an upside of our firm is because, we are basically, including me, we are all solid traders. But when traders do venture investment, we usually treat things differently, including risk, including how we measure the investment durations, and how do we make sure that the overall portfolio of on-the-firm value is, measurable. Yeah, to make sure that we can make great benefits from our stakeholder and investor. Yeah, and then that's what we do, and we do trading, and then we deploy capital on the investment. Basically, try to provide capital to the market. Yeah.
Amazing. Chou, since you have got the talking stick, we're going to go with you first with the first question. What is the role that blockchain technology plays in promoting transparency and accountability in investment strategies? And in particular, what is the role that it plays in ensuring that investments align with sustainable development goals?
Mine first?
Yeah. You got the talking stick. It's called Mike.
Yeah, so basically what I saw, like every investment, including equity, commodity, or even bonds, or crypto, no matter futures or spot, everything is about risk. Yeah. So the measure that you make sure that how we maintain sustainability is actually one thing that we are trying to figure out a balance about our portfolio. So basically, let's say a very simple question. So You know, for example, like I have a portfolio. Every portfolio, no matter it's stock, Bitcoin spot, Ethereum East, or some short futures, you know, we always need to have some balance, right? And as a regulated from US SEC, basically our investment need to be make sure, you know, I would say more like a sustainability ESG, I would say. This is some guideline that we will see, but it's a challenge for us to make sure that, you know, we met in the two between. First, the portfolio need to be risk management and maximum profitable. And then second, you know, we also need to have the sustainability, you know, make sure that, you know, we cannot give the impression that, you know, every investor on the Wall Street is evil, right? These two is something that we need to make sure that take a balance. I think that's a very high moral standard we need to talk to when involving the investment, yeah.
Okay, we go around the table. So, Takatoshi, do you want to take it?
Yeah, let me touch on the transparency part. So, you know, I've been in the hedge fund industry prior to coming into crypto for about 20 years. And, you know, the whole promise just coming into this market was getting everything on chain. But in reality, a lot of it is not really on chain, right? If you look at trading in general, it's in a centralized order book, basically run by central databases. It's not really, the trades are not really transacted on chain. Even if you go into DeFi, AMMs, et cetera, I mean, they are kind of on chain, but it's not really transparent. And I think that, you know, when we look at investments into the future where we get traditional finance industries to adopt blockchain technology, I think that's kind of the way that we need to kind of remodel the financial infrastructure, because even today, you know, crypto industry still runs quite a lot on, you know, central order books that are not on chain. And I like to see, you know, more projects being built on that so that there's more transparency of what the trades look like, how are they matched, or even if they're derivatives, you know, options, et cetera, those things can be run on smart contracts as opposed to run on central databases. So I think that's the kind of area that I do see that investments going into that would remodel the infrastructure for financial institutions.
Yanshan?
Yeah, I just want to echo Taka's point on transparency as well. So at Figment, we run proof of stake networks, and essentially it involves validators verifying transactions, you know, penalties, rewards, all kinds of activity on chain, right? In a verifiable, auditable manner in real time, right? So, you know, by conducting transactions on chain, this is what you get, right? As opposed to, you know, having those transactions on the exchanges and DeFi protocols like Taka mentioned. So in a way, I think with this, investors can find that when they are looking to invest in a project, it is something that they can, they have actual data to base it on, right? And also when you look at institutional players, right, especially in Vietnam where the Web3 industry is rapidly growing, this builds additional trust because of the accountability factor, right? And what we have next is then thinking about how the industry can be looking at blockchain adoption, right, to promote this area of transparency. Because the ethos of proof of stake networks comes in not just accountability, but also promoting energy efficiency, right? With these two pillars, I think, you know, this is something that perhaps may be useful for you know, not just the Vietnam market, but, you know, any markets that really care about transparency or ESG. Yeah.
Yep, I think I want to build on Yanshan's point on staking, right? So before an asset can be staked, it has to be first a crypto asset, right? So I've seen all these ESG products from financial institutions. Tokenization is becoming a real deal. We have seen Plume Network, I think this year, hit quite a large TVL as well. So how Bitgo we help in these ESG sustainability projects is that we go to funds, we go to institutions, we tell them, if you want to tokenize your product, it's fine. Once you tokenize it, you need a safe space to custody it. And that's where we come into play. And because we're a very, very heavily licensed institution in the world, before we can support their token, our back end would have to do some due diligence to make sure that no potential smart contract issues or no rug pulls. And once we as an institution can sort of support this tokenized asset, be it tokenized funds or carbon credit projects, then smaller institutions that may not have the money to purchase maybe 250K worth of these tokenized bond, through tokenization, they can put 10,000, 50,000 and buy it and store it and gain returns in the future as well.
Yeah, makes a lot of sense. Chou, I think we're going to start with you again because I think this one is more appropriate for you and your background. So we're talking about trading, we're talking about investing, we're talking about sustainability here. How can one reconcile the financial gains with sustainable development practices and sustainable investment strategies in Web3?
So you're asking about, in a trading perspective, how to make sure we also keep it as a sustainable and investment way?
Mm-hmm.
That's a good question. Yeah. From my side, basically what I saw this is two things. First, always come about risk, right? So traders definitely trade, venture capital definitely, invest in good project. So these two, we make every decision on every moment, every day, right? High frequency trading make every second. Venture capital, capitalism make decision every day, every week, or on every meetings, right? So on every meeting or every decision that we can make is actually can try to be more biased. Let's just, for example, if we already know that this project is going to be more, energy consume, more not that friendly, but compared to others, usually there will still always be the same return, same ROI, same team, same structure, same term. Ideally, that we definitely will choose a better one. It's because for us, there's nothing to lose, right? So it's about comparative. So for example, like, let's say, there's usually our trading team, we have multiple project approach to us, to our CEO. We will probably sit down and take a look to understand their ecosystem, right? Usually, there will always be some project that we know that it will be highly consuming on something about the utility. Let's say, for example, highly electricity. They need to use highly resource commanded. That is not actually, to be honest, that is not a great thing for cash flow from the generative. So for that, we naturally will, take that off our tables. So to be honest, we don't actually put ESG in our main course of the decision matrix, but at the end of the day, every project that stands out of the tier one on our table, it's usually the one is ESG, because if you are a really good project, you already make things very efficient. Because in my personal definition, if you want to achieve the ESG, is to make sure you utilize things more, no matter it's people, resource, is efficiently, right? That's one of my takes, yeah.
Interesting. Takatoshi, do you have anything to add?
Yeah, it's a different angle, but if I had to compare crypto investing from a VC perspective and how the infrastructure is built out compared to traditional markets, it's a lot more immature. So let me take you through a normal IPO process, right? So, let's say I'm a VC, I invested in a startup, grew, 7 years later, it's ready for IPO. What I would do is go to an investment bank and work with the bankers to find buyers on the other end, right? They'll be asset managers, hedge funds. You'll supply them with enough, exit liquidity so that they can, VCs can, or whoever, private equity investors can exit their positions, right? Whereas in crypto, it's largely, there's none of that activity usually done, primarily because most of the hedge funds and trading firms in crypto are high frequency traders. So they're not really directional investors. They don't invest in a certain project for the long term. They just more opportunistic, I would say. And there's nobody in between an exchange and the projects to actually go find asset managers that would like to invest in those projects after it gets listed. So in the end, it just becomes a retail becoming the exit liquidity for the VCs, and then it just cycles the same thing over and over again until retail gets sick of it and they don't want to invest in this game anymore. So I think what we need to see a bit more maturity is in the investment side, the buy side, to grow not just from just trading, high frequency, but mid frequency, longer investments, more like a long-term investment perspective, and come in. Those investor groups are lacking in this market today. That I think that if they were to come, and if this market is going to be around for the long term, then this has to happen. And so far, we haven't really seen these type of asset managers come in, which should be the exit liquidity for the VCs in the future. So what I would like to see, like going forward, and it pertains to your sustainable growth in this industry, is that we need varieties of investors to come in, not just taking opportunistic, kind of short-term bets on crypto.
Yeah, I'm sure that as the industry matures, we're going to see more and more sophisticated players. I mean, we're already seeing what's happening in the public markets, right? But yes, so Yanshan, do you have anything to add to that?
Yeah, so from what I'm seeing is that the balance for how investors can find this balance really comes down to their infrastructure choices, right? So when you look at blockchain investment, you can broadly categorize them into a few different types of consensus mechanisms, right? So investors that can be investing into proof of work, into the mining ecosystem, that's great, that can yield you great returns, but in terms of energy consumption, energy efficiency, that might not be the most ideal, right? Whereas, if you're looking into proof of stake infrastructure, right, that's a different story, right? Essentially, you're supporting, decentralized networks and improving their security, and at the same time improving energy efficiency while running these networks, right? So just take an example, right? Let's say if you're staking Ethereum, right? You're not just earning that yield, but what you're doing is actually really helping the Ethereum supporting the Ethereum network security and ensuring that more people continue to use this network, and thereby reducing the reliance on POW, right? When you look at Ethereum is transitioned during the merge from POW to POS, energy consumption dropped by 99.95%, right? So it's a huge shift, right? The energy consumption for blockchain has dropped significantly, and it really comes down to choices, right, for the investors, right? Additionally, right, with the staking rewards, what you can do is to really put them, put them into DeFi protocols that have green initiatives in place to drive further development of such projects, right? But of course, as I said, that comes down to choice, right? Whether these investors have, intentionally really want to promote this environmental change or, social change, and see that long-term value, right, that it can bring to their portfolio. Yeah.
Interesting. Yes, go ahead.
Yep, for me, I think first question is, do you think Bitcoin is like a sustainable investment? Because for many years, because of Bitcoin's proof of work, right? So electricity charges is gone off the roof. A lot of people say it's not green. And then comes proof of stake, like Yanshan mentioned, reduce electricity costs by 99%. And personally, I feel my answer is yes, it's sustainable. It can be done. One great example is Bhutan. So in Bhutan, they are the first carbon negative country. They have around 2 billion worth of crypto assets. And many people might not know, but they have one of the largest mining pools in the world. And how they do it is by hydroelectricity mining. I have the opportunity to go to the country last year to visit. And Bitgo, we store most of their crypto assets in our cold custody. We help them custody it. And they had showed us how they mine their Bitcoin from just using their natural resources. So it's all clean and green. All the Bitcoin mined by Bhutan, it's all carbon negative. It's not even carbon neutral, it's carbon negative, which is something that we don't see across many mining rigs across the world. So this can be done. So yeah, I hope in the future, more and more Bitcoin mining can become more sustainable and look at Bhutan as a huge use case.
Yeah. Our sister company is one of the largest European Bitcoin miners, and it's all run on hydroelectric. So quite familiar with the subject. Okay, so let's move on to the next question then. This is about, and probably the answers to that is that it comes by default or whatever you guys are going to tell me. But what are the key challenges and opportunities that you guys are facing when you're integrating sustainability into your investment strategies, okay? Or in your clients' investment strategies, right? Do they look at that? Do they take that as a priority? Not yet? Or when, for example, when you're considering investments, does that fit into your criteria? Just take it as you wish, please.
Yeah, so basically you're asking, I'm trying to rephrase it. So how do we make decision on investment, right?
Yeah,
Like,
is there an opportunity for you to, when you trade, or maybe for the others, it's a little bit better for the custodians or ledger, if your clients are interested in that, but from a trading standpoint or from an investment standpoint, do you see opportunities or challenges in incorporating these sustainable practices in what you do?
Yeah, I think I can answer this in also two part. So for the venture capital, usually the key matrix that for us to decide if we are going to join this round is, I think it's like very similar to other major VC, including I think most of the fellows right here. So first, definitely good teammates, good team background, because we all know that crypto market is big. A lot of people are wanting to join to build something, right? Yeah. So basically, with a large sample, you still always need to find the best one. So for us, I think as an investor, our job is to make sure that keep filtering, right? And with the market trending, maybe last year we are focusing on yield support on project. This year maybe some AI, and this early of the year. Right now it's more on the stable coin. So this is the trending about the market. So trending is good, so we have a storyline. But on the other hand, there's a lot of project want to do AI agent, but they claim there is AI agent, but it's not. So as an investment at a VC, that is our job to make sure that we pick the right. So I think team background is definitely the one that we want. And second is, I think I can agree with, usually all the VC players like to team up. Team up not meaning that we pay the money. It's like we have a consensus about, is this project good enough? So usually, for example, I have a project that is in our radars. Usually I will ask with some other VC that, hey, what do you thought about this? Do you guys join this round? So this is something that our VC will do. And this also makes us an opportunity to make sure that we can team up. Maybe we can, explore more opportunity that how we can work together. That, for me, that's how usually make the capital more efficient. So for example, if the project is raising for 100K, instead of the 100K is filled by one single VC, but this 100K is filled by 3 different VC with different background, different partner, different connection, I can guarantee you the latter one will give more upside on the cap table, not just money. Money is, everyone can provide capital. I think the most important thing is how each different VC investment can do. That's for the VC part. And I think the trading part is more easier. It's just definitely, just make sure that we do trade good, like risk control good. If the trade is not good, just stop it. Yeah, this is similar of all the investment. Yeah, I said easy, but it's actually sometimes hard, I would say, yeah.
No, I can tell. Speaking from experience, it's very hard. Takatoshi, is there anything you would like to add?
Well, it's kind of timely because we were also thinking about how we grow our business in an ecological sense, and we're going to launch a Ledger hardware wallet made out of bamboo. Not true. Not true. We're not going to do. No, actually, over the years, personally, I've seen a lot of like these provenance-based, blockchain and resources, and tracking and all that. But I haven't really seen anything that really, really caught traction, to be honest. So I'm still kind of still wondering if there's a real use case for that using blockchain, to be honest. So I'm still kind of looking, see, I don't know. I don't have an answer for that.
Do you get your clients to ask you about sustainability practices over at Ledger?
Well, being a French company, it has always been kind of like discussed about how ecological our business should be. Obviously, we do have a manufacturing facilities, in Vietnam and other parts in the U.S. and France as well. So we are kind of looking at how we can reduce our carbon footprint there, energy consumption, etc. That's something that we do, as any company, we look for the best way to kind of be ecologically friendly as possible. To showcase that a French company is kind of working with the European Commission to kind of follow the carbon footprint reduction, but nothing beyond excessive from that.
Yeah, and Yanshan, I know the difference between POW, POS. You talked about this before, but when you're talking to institutions that want to get into the staking business, they want to generate some yield on their holdings, maybe their investments. Do they ever ask or bring up sustainability in those conversations?
Actually, yes, they do.
Nice. Go ahead.
I mean, for us, historically, when you look at just pure Web3 kind of opportunities out there, right? For us, we do staking. Most of these allocators, in the Web3 space, maybe because it's still early, there's still many things to be thinking about, and they're not putting ESG as priority. So a lot of that conversation revolves around more of like, what's the short-term gain, what's the yield I can get, what's the security, what's the regulatory compliance, that aspect. But as we see the convergence of Web3 and Web2, meaning practically that as a staking firm, we start to provide solutions to traditional banks, traditional institutions, that topic comes up. Because ESG is becoming more and more important in many of these financial institutions, they are legally and regulatorily required to follow these ESG principles. Just to take an example, a recent bank we have in Singapore just posted us a questionnaire of ESG questions which have at least 10 pages, asking us if we have child labor, asking us if we are doing some malpractice on many different types of social and environmental and in alignment with global standards, right? So this is an example that how in the Web3 space, we see ourselves having to evolve and adapt to be able to meet the standards of these institutions should we want to work with them in the future. Yeah.
Aldwin, you speak to very similar clients as the
Yeah,
client,
in fact, the same document
same.
that he submitted, we also submitted the same thing. But I think the main concern or the main issue I have is liquidity, right? If you want to, let's say, ESG funds, tokenization, we help clients launch, if you've ever heard of carbon credits. So they have a carbon credit exchange where they can trade online carbon credits, and they do it on the blockchain as well. So as a Bitgo, we provide the hot wallets, warm wallets. We help them build the basic infrastructure for that exchange. And a lot of times we see the exchange fail to scale. And that's because there's not much trading activities goes there. There's no liquidity. And I think the follow-on will be, how can DeFi help this? I feel like DeFi has a great thing called automated market maker, so it's the AMM pools. And in this case, if the issuers, they want to reach out to the Web3 audience, they can actually tokenize the fund, they can put it on-chain, put it on a protocol, put it on a pool. And then the issue of liquidity comes up again. Who's the one that would seed the initial liquidity so that traders can trade it with the AMM pool, right? It's automated. So retail wants to go in and trade, but there has to be someone that sees the initial liquidity. In my previous firm, how we did it is when we help them tokenize maybe a carbon product or something, we would ask the issuer, if you raise $10 million, you put in the first 2 million into that liquidity pool so that at least your smaller investors, they can get in and out quick, right? Instead of being stuck there for many days like in traditional markets on the OTC side. For illiquid assets, you could be stuck there for a couple of days and then the price falls to like 70, 80% down, and you can't exit.
Very good, very good. So this one is more about the investment side again, but it talks about VCs. So maybe we can talk about your clients in your cases, and maybe your specific situation in yours, Chou. And it goes back to what we were talking about before, but how relevant is it really to go after ESG practices or ESG themes when it comes to crypto investing? And then for you guys, then it's going to be more for your clients, of course, when you talk to the VCs that stake with you or custody with you or use your products. Do they prioritize those kind of investments, or is it a nice to have still? Chou, if you want to go first, please.
Yeah, sure. I think ESG or the sustainability, this topic is start being very essential since like 2010. And the reason is because that it's a debatable, but from the beginning, because investor always chasing for higher returns, but how do we make the balance? But after those few years, we start having ETF with focusing on ESG. We actually discovered that, with the ESG more concept, the return is not necessarily bad. Just like what I mentioned, we don't, definitely ESG is something that we will consider in our matrix. But if you think about it, if you are a company, or if you are a protocol, if you are a project, if you are a more ESG, more sustainability team, it's actually meaning that you are using your money more efficient. That's the whole thing. So for me, I won't pick, okay, if your guys are sustainably or not, it's because the team I eventually want to invest is they already make sure the capital is already used very efficient. So for example, if I deploy 200K, right? These 200K, they hire like 30 guys, half of them do marketing, half of them do backend. But after our valuation, to be honest, you just need like 5 guys. This is something that not, sustainability, because in my definition, sustainability not just including energy, not just including environment. It also includes that, you hire more people, you become more, capital drawdown, and then you make sure that your team move more slower. And when your team move slower, you start raising more capital, right? And then more VC drag into the game. And then the story become very long. That's actually not efficient. And that's all actually the team start becoming more uninvestable from the first time. Yeah, so actually on the cap table, every time that we want to invest, the team is already, I describe it as, naturally sustainable. That's my view. Yeah.
Takatoshi, you want to go next?
Yeah, I think, some of our clients are miners, and they do talk about, obviously, with every, 4 years, Bitcoin having, the cost of running an operation is getting a lot more expensive. They always look for countries, states, regions, wherever they are, that provides them the cheapest energy possible. And a lot of, through subsidies, they've been finding a lot of localized regions to sell them energy that are green, that is more competitive compared to your dirty fuel as well. So they have been kind of moving towards that direction, at least from our clients. So we see a lot more those clients taking that opportunity to kind of consolidate their mining facilities in those locations. And part of our manufacturing facilities as well, we think about it in the same way. Obviously, there's a cost to building hardware wallets, so we want to make sure that these products are built in the most cost-efficient manner. And if there's any localized jurisdictions that are willing to offer green energy at a subsidized cost that can be much more competitive than your average source of fuel, then we'll be moving there as well.
Sorry. from your client's perspective again, and for you too later. Do you see any differences from what the gentlemen here have said?
Yeah, not really. I think I kind of echo with their points, especially what also William mentioned, that when VCs, when they look at investments, they don't necessarily, I don't see, there's currently, especially in the Web3 side, a huge focus on ESG yet. But by allocating the capital in the most capital efficient way, finding the most scalable investments, that can help them, indirectly to be supporting ESG initiatives. Right, so at Figment, we have a spin-off called Figment Capital, which is also a VC, and we focus on blockchain infrastructure investments. And by focusing our efforts, towards the POS, ecosystem, we are actually supporting blockchains that are energy efficient, that are running, in a way that is supporting many green DeFi protocols, for example, right? When you are supporting Ethereum, you are supporting, Curve's Tripool, which is environmentally friendly in a way. And if you're staking Polygon, for example, you're supporting tokens, tokenized carbon credits, right? So in a way, to echo his point, we don't specifically necessarily be looking at ESG initiatives, but what our end goal is and what the end outcome is by supporting this type of blockchain infrastructure that's energy efficient allows us to achieve that objective indirectly.
Yeah, I think in my perspective, it has to come from a top-down approach. So from the government, from like Bhutan, from the king, his perspective on how carbon credits, how ESG is doing, and then it will flow down to the VCs, flow down to the investors. Maybe one more example is Malaysia. We have a client who is one of the largest crypto funds in Malaysia, and they have told us that they would increase the AUC by 50 mil by the end of this year. So a natural question I ask is, where is this coming from? Is it more Bitcoin, Ethereum? And they actually told me it will come from ESG funds. And the ESG funds, who's the one buying them? Because I'm saying, are you sure Web3 people would buy it? And so they said they already have a few institutionals lined up to buy these tokenized ESG funds. And the government is the one that sort of mandated them to buy it. So right at the offset, 50 mil USD of tokenized ESG funds will come into play.
Seems that people are understating the importance of ESG, especially when it comes to liquidity. That's very interesting. Unfortunately, we are running out of time, but it was a very insightful conversation. Thank you, everyone.
Thank you.
Thank you.